I think the halving cycle worked in the past, but I think there's too many things that are 4 years. The monetary policy cycle really doesn't explain the 4-year cycle. It explains Bitcoin in the short term, but not on a 4-year basis. The speculation cycle doesn't really work because it only explained one of 3 margin cycles for Bitcoin. But this gold versus Bitcoin versus copper, yes, it does seem to really be explanatory, and it's telling us we're not really near a top because industrial activity isn't peaking. And then finally, when it comes to the business cycle at ISM, I think it is actually quite explanatory, and again, not a sign of a top. So our takeaway is the Bitcoin price cycle actually seems to follow industrial activity in gold. And the message currently is HODL. I wouldn't be giving up on Bitcoin and assuming the price has already peaked.
Since 2010, Bitcoin has moved in repeating cycles of approximately 3.9 years. Each cycle features a powerful multi-year expansion followed by a sharp one-year bear market, almost like clockwork. Historically, many analysts, Tom Lee included, attributed this rhythm to the Bitcoin halving event, which cuts block rewards by 50% every 4 years. And for a long time, that explanation made sense. Reduced supply equals increased scarcity, which equals rising prices. But things are different today. Bitcoin is no longer a retail-only instrument. Institutional investors, corporate treasuries, and even governments are now active players. Because of this, Tom Lee argues that halvings alone cannot fully explain Bitcoin's repeating 4-year structure.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
You wonder, what is the Bitcoin 4-year price cycle? Well, it is something that is hard to explain, but if you look at Bitcoin's price since 2010, and we've marked it with the green lines, there have been 3.91 year cycles. And at the end of those cycles is a 1-year bear market. Now, why is this happening? In the past, I would have said it was because of the halving cycle, which happens roughly every 4 years. But there's other possible explanations. It could be monetary policy related to M2 and Fed action. It could be a speculation cycle related to margin debt. And keep in mind, Bitcoin until the last couple of years was retail only, but it's different today because of institutional investors. But it could be industrial related. It could be that there's an interplay between gold and Bitcoin and copper. In other words, an industrial activity ratio. And finally, it could be business cycle related too. So let's examine these 5 possible explanations. So the halving is when the Bitcoin block reward is cut in half. It does reduce supply. So in the past, I would have said that this could explain Bitcoin's price action. And as you can see, the halvings occur here. Now again, I would have bought into that view, except in the last few years, there's a new source of flows which did not exist for much of the Bitcoin history, which is institutional adoption and possible government adoption of Bitcoin. And another reason I'm not necessarily believing this is that there's a lot of other things that are on a 4-year cycle. Presidential cycles, leap years, Olympics, FIFA, the World Cup, and rugby, etc. So let's switch to monetary policy liquidity. That could explain things, whether it's the Fed cutting rates, quantitative easing. I think those are, in the near term, definitely important factors. But do they explain the 4-year cycle? We could look at M2 supply and see if that explains 4-year cycles. In other words, is there a monetary cycle of 4 years? Well, the reality is, if you look at the peak of Bitcoin prices, it has not been affected by Fed liquidity. So I don't think that's the explanation. Well, let's talk about retail margin debt. Now, this could explain something because we know retail investors were buying Bitcoin in the early days, and they continue to, but they're not the only source of flows today. As we can see, a lot of this is institutional money. But you can go to FINRA, get the margin debt, and this is what the chart looks like. So, I think it looks a little cyclical. In fact, if I overlay this with Bitcoin's price, they do look somewhat related. But here's the thing, the peaks don't match up. Bitcoin enters a bear market even as margin debt is still going up. So I don't think margin debt really explains Bitcoin's peaks. So that gets us to copper versus gold. Someone on Twitter posted this, named AOBTC analyst, and I thought it was interesting. This is saying, is there a copper gold ratio marking Bitcoin's relationships? Here's why that's interesting. Copper versus gold is a measure of industrial activity versus a fixed monetary base. So when industrial activity is peaking, that's a high copper to gold ratio. Could that signal a peak in Bitcoin's prices? Well, let's overlay that chart. And if we look at the peaks in that ratio, in fact, it does correspond very well with the peak in Bitcoin prices. So I think that this is actually very explanatory, but look at the current ratio. It's not signaling a top. And let's think about ISM manufacturing along that same line. ISM is really the most important measure of US industrial activity. When that index is above 50, the economy is expanding, and when it's below 50, it's in contraction. So the business cycle peaks are marked here. Current reading is 48.7, so the ISM says we're not solidly in expansion territory, and of course nowhere near a peak. Well, how does that compare to Bitcoin's price? If you look at the peak in the ISMs, they do correspond really well with Bitcoin's peak in price. In fact, four times the major highs in Bitcoins corresponded to an ISM high. But ISM is not signaling a top currently. It's still well below 50. So here's our take. I think the halving cycle worked in the past, but I think there's too many things that are 4 years. The monetary policy cycle really doesn't explain the 4-year cycle. It explains Bitcoin in the short term, but not on a 4-year basis. The speculation cycle doesn't really work because it only explained one of 3 margin cycles for Bitcoin. But this gold versus Bitcoin versus copper, yes, it does seem to really be explanatory, and it's telling us we're not really near a top because industrial activity isn't peaking. And then finally, when it comes to the business cycle at ISM, I think it is actually quite explanatory, and again, not a sign of a top. So our takeaway is the Bitcoin price cycle actually seems to follow industrial activity and gold. And the message currently is HODL. I wouldn't be giving up on Bitcoin and assuming the price has already peaked.
Another analyst perspective argues something different, that Bitcoin's current weekly close below the 50-week moving average is a strong sign the top may already be in. Historically, weekly closes below the 50 WMA during post-halving years signal the beginning of a major downtrend. Based on this view, there's a 60-70% chance the top is already in. Death crosses often signal cycle weakness, but sometimes mark bottoms. Bear markets are normal in mid-cycle years like 2014, 2018, 2022. Bitcoin often rallies back to the 200-day moving average even during bear phases. A temporary bounce is likely even if a deeper decline comes later. This perspective highlights uncertainty because while industrial data suggests Bitcoin should continue rising, technical data suggests caution.
Historically, that's not a good thing. Now, again, I don't control the market. You don't control the market, as I said before, right? Trade the market that you have, not the market that you want. And there's obviously some nuances to it, and we're going to cover those in more detail tomorrow because it's not like the exact same thing. But when you look at all prior Q4s of all prior post-halving years, when you get weekly closes below the 50-week moving average, it historically has meant the cycle is over, right? That is what it has historically meant. And again, this is one of those things that, like, you can't really dispute that. Like, it's just a fact that when Bitcoin gets the weekly closes below the 50-week moving average in the post-halving year, it then sets up the drop to the eventual 200-week moving average. Now, last cycle, we even went below the 200-week moving average. Does this cycle, did we go below it? Here's the thing. The bears have a solid case. They do, right? And we've talked about this for a while, that when you look at the ROI from the low, you have to, it has to be an outcome you consider here. Because, you know, when you look at it, Bitcoin topped right around the same time that it always does when you measure the ROI from the low. Or if you measure it from the halving, right? You measure it from the halving, that's also, you know, you could argue, hey, why would you expect too much more when it tops when it always does? Okay? So that's true. It's also true, like the bulls are saying, well, hold on a second. We didn't have a euphoria phase, right? Like, you know, none of the indicators that you would have expected to top or to signal actually went off. It's been sort of a slower move up. And that's why I've more so compared this to sort of what happened in 2019, right? Where we don't top on euphoria, we top on apathy. And if you don't know what I'm talking about, if you go look at the social risk, social interest in crypto, you can see that we've more so topped on apathy like 2019 rather than euphoria like 2017 and 2021. So what I'm thinking, first of all, is that there needs to be a little bit of wiggle room, right? I've said 2 weekly closes is kind of what you want to see for confirmation. There was some time in 2019 where we got a weekly close below, and then we got right back above it the following week, and then we kind of hung out at the 50-week moving average, and then eventually we moved up again, and then the market crashed, right? I would say at this point, given the fact that we've closed below the 50-week moving average, and given how late cycle it is, I would say there's probably a 60 to 70% chance that the top is already in. Okay? About a 60 to 70%. Now listen, at the end of the day, we just had a death cross. There's plenty of times where death crosses mark local lows within a few days. So I'm not asking you to go make rash decisions, but it is something to keep in mind. Like, we're all adults here. It's just something to keep in mind. And to remember that bear markets are a normal part of the cycle, right? Like, they happen. They've happened every single midterm year. 2014, 2018, 2022. Could this just be setting us up for 2026? You know, you could have a scenario where it does like what it did last cycle, where it drops at the end of the post-halving year, and then at the very beginning of the midterm year, it rallies for a little bit, you know, back up to the 50-week moving average. Right? I think that's a possibility that absolutely could play out. I do want to draw your attention to the death cross and to note, like, there are times where Bitcoin finds a low around the time of the death cross, right? I mean, it happened earlier this year, and it's happened many, many times. So I want to, I don't want to ignore that. Like, the bulls have a point that, hey, a lot of times Bitcoin finds a low around the time of the death cross. But at the end of the cycle, it doesn't have to. That's the hard part. Like, there are times where at the end of the cycle, like, people wait for the death cross rally. It doesn't happen. You get kind of like a small little rally, and then it dumps further. People panic sell, and then you get a rally up to the 200-day moving average. So I want to draw your attention to that. If the top is in, then you would expect at some point a rally back up to the 200-day moving average, right? Like, it's happened every single cycle. It also even went above it in 2019. But we tend to get that rally back up to the 200-day moving average at some point. And note that we're pretty far below the 200-day moving average right now. But I would guess that at some point, if the top is in, Bitcoin would get a rally back up to the 200-day moving average, right? That doesn't mean it can't go down first. I mean, it could. But the 200-day moving average, I'm going to guess, will come into play regardless of whether the cycle top is in.
And that concludes this expert breakdown of Tom Lee's deep analysis of Bitcoin's 4-year cycle, one of the most mysterious and misunderstood rhythms in global markets. By examining the halving narrative, monetary liquidity, retail speculation, industrial indicators, and key technical levels, we gain a clearer picture of where Bitcoin may be heading and what truly influences its long-term cycles. Whether you're a long-term investor or a short-term trader, understanding these forces gives you an edge in navigating what many believe to be the most important digital asset of our lifetime.